Top Picks is brought to you by Questrade, where you can trade stocks from 1 cent and buy ETFs for free.
Let's get to these top picks from David Burrows, President and Chief Investment Strategist at Barometer Capital Management. We're starting with the Disney company. Bought this most recently in, this month at $77.29.
Right. So this is a company we've owned for a little while. We're in a market where consumer sector in general is one of the leading 5 groups in the market. And within consumer, media is very strong and leisure is very strong. So if you think about it, we're in a world where the distribution of media content is exploding through all different channels, whether you're looking at phones or tablets or PCs or cable or satellite, doesn't matter. So those that own the content are garnering tremendous value for that content. Disney is a remarkable company in that they not only have content like this Frozen movie that came out over the last year, $850 million worth of global sales. That's a new franchise for them. Not only can they sell the movies themselves, but they make all kinds of ancillary revenues around it, selling products and so on. So they're able to monetize that extremely well. So that's an example. Their cable assets are performing really well. ESPN's doing well. They are probably the only ones who could pay $4 billion for the Lucasfilm's Star Wars franchise and turn around and make money at it. So they'll have that coming in 2015. So that's another driver. When you look at where people spend money when they first start making a little bit more, it's travel. So Disney falls right into that sweet spot, specifically in developed countries. But they also have the new Chinese Shanghai park coming over the next year, which will be another driver. So theme parks are doing very well. Media content, I think, will continue to be more and more valuable, and they have the distribution. I think this is a pure play on the consumer, and when commodity cycle rolls over, it tends to be in a low inflation world. Consumer-related sectors do better, and Disney is a powerhouse.
Next up, Micron Technology. You bought this most recently February 20th at $25.47.
So we really like technology as a group. We've seen very good expanding breadth across semiconductor software, internet-related plumbing, and so on. We know there is a boom in content being distributed. We just talked about that. And a boom in the need for storage. So Micron sells solid-state storage that's used in everything from computers like a MacBook Air to tablets and phones. Micron is interesting because historically it was a very cyclical company. There's lots of companies that produce this stuff. It was a commodity. Every once in a while there'd be a pinch in supply, so that everyone would build new capacity. There'd be oversupply, and pricing would go like this, up and down, up and down. In the last 2 to 3 years, there's been big consolidation in the companies that produce this. There's now basically only 3 companies that are selling this product. And Micron is one of the leaders. They roughly each have about a third of the market. When you have an industry consolidate down, there becomes pricing power and some discipline, and it becomes very hard to get big boom and bust cycles. Because it costs so much to build a semiconductor fab, it's very hard for new competitors to come in. So I think we've entered a world where these companies are far less cyclical, more predictable, have more pricing power, more innovative, and in that world, the earnings multiple investors should pay may expand because they don't worry as much about the future. So semiconductors are a great space. We think memory is into a very interesting cycle, and Micron is the leader in the group, and they're delivering good numbers. They beat the estimate by 13% in the most recent quarter.
And lastly, tell us about Linamar, the auto parts manufacturer, which you bought a bit of this month as well.
Yeah. So Linamar is an auto parts company. We've talked about Magna over the last year a couple times. We like the auto industry because there's an aging fleet. We know that the biggest pressure on automakers is to become more efficient, to compete against companies like Tesla. And so Linamar is big in drivetrains and transmission, and they are a leader in new technologies. So not only are they winning additional content in more cars as their automakers are looking to become more efficient or more energy efficient, but you've also got a recovering auto market. So Linamar is a great company that benefits as the Canadian dollar falls versus the US dollar because they become more competitive. And we like the space, so good company and a good sector.
We will wrap it up there. Linamar Corp, Micron Technology, and Walt Disney Company. Those are your top picks. Always great to see you.
Great to be here. Thanks for having me, Mark.
Covered a ton of ground, and it's always an education when David Burrows is here. Our thanks to him. Thanks for all your great questions. We are at PDAC next week, Monday and Tuesday. So tune in for that and send in your questions as well to marketcall@bnn.ca. We'll see you later. Take care.